Hi there everyone, my name is Sakib Orion, the oil trader here at JNF Capital. I'm basically going to give you a small insight into crude oil this week. However, it's going to be a shortened version. Basically, as you may be aware, crude oil is going sideways at the moment. We're not in a trend either to the upside or the downside. If you watched my last video, I talked about crude oil being in the neutral zone, so to speak, where the bulls and the bears are fighting it out. So I thought I'd just touch base with you, just let you know that not much has changed. The status quo is still the same. We are seeing a couple of things going on in the market. Okay, for a start, China last week came out and revised downwards their expected GDP, expected rate of growth for this year and the next. I mean, nothing new there. We expected them to do that anyway because the World Bank and IMF kind of beat them to it anyhow, bringing their revisions down to 7.1 and 6.8. We've got a massive build in crude oil last week. The market, it tanked initially and then it rallied after that. So we had a build of about 10.5 million barrels, which is a 14-year high. That should have been a significant bearish signal. The market did sell off, but then it got bought back up straight away. And then you've got Saudi Arabia. Saudi Arabia continues to raise its prices towards, of its product towards Asia and America. That basically indicates to us that they seem to be comfortable that the oil prices will not capitulate too much further from where they are right now, because if they did, and they have just raised prices to their existing clients, I mean, they'll lose a lot of market share. And as you know, we've been talking about this, the whole reason Saudi Arabia has kept their oil production as high as it currently is because they want to protect their market share. So aside from that, another thing that we're looking at is the dollar. Okay, the dollar is just rampaging onwards. It's been excessively strong. We had a strong non-farm payrolls last week, and that has further, spoked the speculation, if you will, that the Federal Reserve will be potentially raising interest rates sooner than expected. And that's obviously very dollar positive. Anything that's dollar positive is oil negative. Okay, so what we have is a basket of reasons to be both buying and selling crude oil. Okay, that is why the market is range bound. One piece of fundamental data seems to cancel out the opposite piece of fundamental data, and that is why there's so much confusion in the market. And like I explained in my last video, it is very, very important as investors, as traders, to know when to be involved in the market, okay, and when to be stood aside from the market. The market is a place that we must treat with respect. The moment you lose that respect and maybe get high of maybe a consecutive winning trades or get depressed of consecutive losing trades, you will find out that you will either miss out on potentially good opportunities, or you'll go straight into potentially bad trades. So it's very important to know when to stand aside. Current market conditions on crude oil after a 60% drop that we have seen are basically exact kind of market conditions that you just don't want to be trading. I certainly don't. The market's been sideways since February, and we've been aggressively short since last June. And that was a good trend that we caught. So now we're happy to sit on the sidelines. Levels haven't changed. Okay, the same levels that were valid on the last oil report are still valid this week, because not much is happening. The market is stuck between 48.56 and 58.64. So we do remain neutral. Okay, we are not going to be engaging in medium-term oil positions right now. However, if we do get a decent breakout from one side or the other, we will be participating in that. Now, before I sign off, I'd obviously like to remind you that trading in the financial markets is not for everyone. Trading with leveraged products, could cause you to lose more than your initial deposit. So if you would like to know more about what levels we're trading around, what we're exactly looking at, when we're looking to engage the market, please get in touch with my team using the details which you will see on the following screen. That is all for me this week. It's been short and sweet. Looking forward to hopefully seeing you next week. Hopefully we'll have some decent movements this week on crude oil, maybe a breakout to the downside or maybe to the upside, and then we can start engaging the market again. But until then, I wish you a profitable trading week and look forward to seeing you next week.